Yeah, crypto had a huge deleveraging event on October 10th, and part of that was triggered by the escalating tensions with U.S. and China on tariffs and trade. And that was the biggest liquidation event in 5 years for crypto. So there is still those ripple effects, 2 weeks later that are plaguing the crypto market. But I think we're almost through that because a measure like something called open interest for both Ethereum and Bitcoin are at record lows at a time when the technicals for both Bitcoin and Ethereum are flipping positive. So I think you're going to see a crypto rally into the end of the year. And it really does help to see JP Morgan say they're open to the idea of using crypto as collateral.
Yeah, I was actually going to get your thoughts on that, Tom. But in light of that, and you and I have had these conversations over the months, over the years. I can think about the conversation we had in early August where you talked about on the exchange, where you talked about the fact that cryptocurrencies tend to be early indicators of where stocks are directionally headed, as well as indicators of liquidity in the broader market. So given what we are seeing in Bitcoin, and as that relates to the S&P 500 and arguably what we're seeing in Ethereum and what that says about the Russell 2000, I want to get your thoughts.
Yeah, I think it's sending a pretty bullish signal. Part of it is it's a counterfactual statement, but crypto had the biggest liquidation event, deleveraging event in history. The number is probably multiples of what happened during FTX, and Bitcoin ends up down 3 or 4%. So I think it shows you that Bitcoin itself is proving to be a pretty good store of value, because if we had seen this happen with gold in the gold market, if there was a huge deleveraging event and gold was only down a few percentage points, we'd of course consider that a real validation. And it's also true of Ethereum, because Ethereum is seeing so much activity growth. On the L1 and the L2, because of stable coins, and it's not reflected in the price. It does take time. So to me, because like what I'd call the fundamental activity on Ethereum is really picking up, it argues for a pretty big move into end of the year as well. But I think it's very bullish for Bitcoin and Ethereum because
why?
Well, gold moves first, and then Bitcoin catches up. Mm-hmm. So I think that there is going to be the network value of gold just went up by a lot, and so let's say gold settles at 5,000. Mm-hmm. That puts fair value of Bitcoin, like 1.6 to 2 million if it matches gold's network value. Mm-hmm. So I think it's actually helping Bitcoin's future terminal price.
So you think that if gold settles at 5,000, Bitcoin, you take the gold market cap divided by the number of Bitcoin, then you get 1.6 to $2 million per coin. What's the time frame for us to get there?
Well, I can see that in 5 years for Bitcoin. So
in
I think
5 years.
Yeah. Yeah, I think Bitcoin. Yeah, I think Bitcoin doesn't get capped by gold. It actually gets pulled up by gold. Mm-hmm. And then, because it's growing the monetary base, right?
Mm-hmm. Mm-hmm. And then this year, gold's up 60-ish%, Bitcoin's up 18 to 20%, depending on the day. Do you think that on December 31st of 2025, we'll actually look back and could Bitcoin have outperformed gold in 2025, even though it has such a big lead right now?
Yeah, we have a lot of time. We have 10 weeks. As you know, Bitcoin makes its move in 10 days a year. So are Bitcoin's best days in the fourth quarter? Probably, because we have catalysts, the Fed's easing. We have a shutdown that's been risk off. We have China-US tensions that, look, every time there's a headline on China, like Bitcoin takes a gut punch, right? Because it is money flows and deleveraging. So that goes away. We have seasonality that favors stocks moving up. Stocks moving helps Bitcoin. So to me, the chances of Bitcoin having a huge fourth quarter are really high, and not all of these would be tailwinds for gold. So I wouldn't count. I still think it's possible for Bitcoin to hit 200,000 by the end of the year.
And what about the 4-year cycle? Do you think that holds, or do you think that was something that was broken by the institutional participation in the ETFs?
Well, most of the crypto people I speak to expect a 4-year cycle, mm-hmm. and they're adamant, that maybe Bitcoin peaks early next year. But as you know, when something is so strongly held, it's very unlikely to be true. So either Bitcoin's already peaked or we have a longer cycle. I'm more in the camp that it's a longer cycle.
But there would still be 50+% drawdowns in the future, or there's a kind of cycle is broken and you get something different.
Yeah, I'm sure there'll be 50% drawdowns because the stock market has more frequent 25% drawdowns. I mean, that's when, even though people realize, I mean, the stock market's made a lot of progress last 6 years. We've had an unusually large number of 25% drawdowns.
Mm-hmm.
And we probably have another S&P decline of 20% next year. So if the S&P is down 20, Bitcoin could be down 40.
What's funny to me is for years now, I've been hearing folks who I would put in, they grew up in the stock market, they're kind of legacy system, supporters and participants. They don't really get the Bitcoin and crypto thing. They have forever been saying, you guys don't understand. There's a big crash coming. You don't know what a real market downturn is, whatever. And I always just think, I'm like, do these people realize that the people holding Bitcoin have seen 2 drawdowns of over 80% in 4 years? That's never happened in the stock market.
Yeah.
Right. And so, like, in this crazy way, actually the crypto people are more prepared for market volatility than the stock people. But it's like, if you haven't like gone through the pain, you just don't think that exists or something. Right. And like the stock people don't acknowledge the fact that you kind of had to be insane to hold through all the volatility in crypto.
Yeah. And actually what I've noticed, and it's not true of but I've met some crypto skilled traders, and a percentage of them are exceptional equity traders.
Interesting.
They've become so good at the EQ of like market moves that they're great at stocks. Not every crypto trader, because a lot of crypto traders are just, degens, but so it really does cross over. I think being good at stock investing is not a skill that's learned at Harvard. Some people are just really good at it.
Well, to me, I've always thought the crypto market is much more of a pure free market kind of macro thing as to how it was originally designed. There's no hours of operations. There's no circuit breakers. These less algorithmic trading. It's just like very, very much how markets, I think, used to operate maybe 40 or 50 years ago. Correct.
A true over-the-counter market.
And today, the stock market is not that. And so you kind of have to pick up the skill in a pure market, and then that makes you better at the somewhat manipulated game.
Yeah, so I found some crypto guys are really even good at timing the market. They've been getting out at the right time. So it's...
Mm-hmm. Well, they're definitely good at recognizing the bank run. So every single crypto person who had money in Silicon Valley Bank, they got it out for sure.
Yeah.
This stock rally, you've called it the most hated rally. The recent sell-off because of Trump's tweet, you called a flesh wound. You're like uber bullish. I am as well, so I'm biased. But why do you think it's so hated? Why do these people want the market to go down? Why do they want the U.S. economy to tank?
Yeah, I mean, I can empirically show it's the most hated. One of the best measures of large investor sentiment is the AAII Net Bulls Index, bulls less bears, because it's been run for 40 years. This year, it's averaged minus 11.7. So every week, the weeks through this year. There's only 3 other times in the last 40 years it's registered negative 11.7. 1990 or more, 1990, 2008, and 2022. All were bear market years. So sentiment reads as if we're in a bear market and the market's up 15% year to date. Why is it the most hated? I think we show this in our research that it's based on political divide. So the country is 50-50 Republican Democratic. But in the stock market world, and there's Pew Research data on this, 57% of professional money managers are Democratic. 66% of hedge funds are Democratic, and something like 69% of venture capital funds are Democratic.
Interesting.
So the risk capital world didn't vote for Trump. So they view his policies as that of someone who is destabilizing to the economy. In the bond market, it flips. 80% of credit managers are Republican. So that's why this year the bond market hasn't been, high yield spreads have been stable, credit spreads have been stable, but the stock market's been volatile.
I mean, it's fascinating to think about, I think the generalization is like the Republicans are the business and the investors and, stuff like that. And they're the ones who are kind of going full risk on because of these policies. But what you're actually making the argument is, no, wait, majority of hedge fund managers and venture capitalists are Democrats.